Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most and do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
All right, welcome to The Wealth Flow. My guest today is Jerry Vinci. He is a senior living marketing strategist. He's an industry veteran and a founder and CEO of CCR Growth. With nearly 30 years of experience in sales, marketing, and operations, Jerry has built CCR Growth into the go-to demand generation agency for senior living providers who want to increase their occupancy, their retention, and their profitability. His firm specializes in creating modern data informed marketing systems to replace the outdated methods with strategies that work, from digital advertising and SEO to CRM automations and to lead nurturing. His clients have seen measurable results, moving from 55% to 100% occupancy in just under a year. He is a sought-after speaker and trusted voice for senior living operators, vendors, and stakeholders navigating the silver tsunami. And I know there's a lot of folks out there that have considered investing in senior care on our audience, as well as potentially looking at this as an investment opportunity for the next phase of their life. And we all, have parents or have had parents that are in potential, situation where you have to decide what we're going to do and how we're going to care for mom and dad, and so I say all that to say, the silver tsunami is a real deal, and looking forward to our conversation, Jerry, and breaking this down for the audience.
Yeah. Hey, thanks for having me, Keith. Appreciate you having me on.
Yeah, absolutely. I always love to start with really your background on where you grew up and what eventually got you into this business of senior care and marketing.
Yeah. I grew up in New Jersey, actually, living now in California. And I got into this work, I would say it started all the way back when I was still in high school. I saw all four of my grandparents go through some type of senior care, whether it was home health or a nursing home, an assisted living community, independent living community. So I got to see a whole different side of the business, because if you've ever had anyone in a nursing home, especially 20 years ago, it was not a good experience at all. That kind of left a lasting mark on me. And I remember thinking when I was there, like, this can't be what good care looks like, and years later, when I started my agency, I really wanted to do something meaningful, something that was more than just helping people sell a product online. I love digital marketing, so I've always been kind of in the digital marketing space, but I've really kind of focused on not just the marketing side, but the marketing, sales, and organizational strategy that kind of helps organizations grow and then maintain growth, or at least stabilize the business if they don't need to grow. And senior living was just such a great industry because of that, because it's a people first industry. And when you look at the numbers, when you look at the data in terms of where this industry is going, it's only going to grow for the next 2 decades, essentially. So, at getting in from an investment standpoint, or maybe if you're a service provider looking to support this industry, there's no better time than now.
Yeah, I couldn't agree more. As we kind of shared at before starting the show, I have experience kind of with the senior population with funeral and cemetery, and obviously we worked hand in hand with, all sorts of senior care from that aspect. So I've seen firsthand and even, almost finalized an investment in a franchise myself for home care. And so this has been something that's been certainly I've seen the opportunity within it. I think it's, beyond the opportunity piece, it's something that's just much needed in society. So looking forward to kind of hearing your perspective on things and
Sure.
what makes a good operation as well.
Yeah. Yeah. So one of the things to mention too, I think, is that I'm no longer just looking at it from the operator side of the equation. Now we're looking at it from the capital facing side. So we're kind of seeing the challenge from two separate lenses at the same time. And I think that's important because what is happening inside the building matters just as much as the investment going into it. So we want to look at both sides and just make sure that what's being underwritten is accurate. If you think about an operator, or if you think about an investor, they're typically depending on the operator to give them information in terms of how the community is performing or how the portfolio is performing, but they're the one that's accountable, right? So they're of course going to paint a narrative that's going to make them look more favorable. Whereas, if there was someone that was sitting between the investor and the operator who could evaluate that portfolio with more of an unbiased lens, I guess you could say,
Yeah.
that would be more valuable to the investor. So that's kind of one of the areas that we're focusing on now is to help that process. And then from an operator perspective, we're helping them find revenue gaps and fix them. So it started off as marketing, and now it's looking at that whole life cycle from the moment a family searches online to the time they move into the community.
Yeah. So why don't, for today's episode, why don't we maybe start from the operator perspective, and then, we can kind of finish with the capital side and
Sure.
an investor, some of the things to look for. But from an operator perspective, what are some of the things that are underutilized that you see when somebody calls you up and decides to start working with you? What are the biggest kind of ahas that you see with how they're operating their business?
I typically the first question that we would always ask would be in and around where they're getting their leads from, or where they're getting their move-ins from. There's a big piece of the puzzle within the senior living space that are called third-party aggregators. You've probably heard of like a Place for Mom or Caring.com, and essentially it's a lead service, and a lot of communities rely on this for their pipeline. And the problem with that is the third-party aggregators will typically charge the first month's rent as their fee for acquiring that resident. So the cost of acquiring has become so incredibly out of proportion to what it could be if they built their own pipeline internally. So that's kind of the first place that we're going to look at. Where are their leads coming from? What channels are operating best for them? Is their growth sustainable? How has it performed over time? Have there been dips in their census or occupancy? And if so, what's causing those? A lot of operators may not even know. It's unbelievable to me how many operators don't have a proper system in place. They don't have a CRM, or they don't have the full funnel capture where they're looking at, okay, this person came in through search, then they picked up the phone and called, and then they talked to a chatbot, then they scheduled a tour, then they moved in. A lot of them can't track where somebody might fall off in that process. And the challenge with that is with senior living, it's a multi-touch process. It's not like somebody's going to do a search and then they're going to move in the next week. And typically it's the adult children making the search. So, does the operator own his pipeline, or are they relying on those third party? That would be first and foremost. And then, who are they talking to? What is their marketing saying? Are they talking to the adult children? Are they talking to the seniors themselves? And a lot of times operators will tend to lean more towards talking to the senior and talking about the amenities in the community and how great all the activities are. But the family really wants to know, is my loved one going to be safe? Are they going to be cared for? Those are kind of some of the first things that we're going to look at just to see where they stand in the market.
Okay. Yeah, that makes sense. And and what if we were to break it down from, what is typical? I mean, are they typically getting residents, from maybe a percentage standpoint, if you happen to know what, but like, how often are they going to the actual senior? We used to do a kind of a grief counseling within one of the facilities, and they allowed us to use their building to do this. And, we would bring in some refreshments and different things. But then it was just sort of a host that we allowed anybody who had recently lost one of their loved ones to participate in. The idea also being, and the reason they were open to it is because oftentimes it was, a spouse that they had lost, and now all of a sudden they're, coming to this place, getting familiar, going to it for grief counseling. But it also is, okay, now that my husband's no longer with me, what am I going to do? Am I going to downsize? Am I going to move into something like this? And so it gave kind of a segue to, take down some of the guards that people would have to become familiar with it, to understand it, to possibly meet friends that, are residents there and that kind of thing. But how are they? I mean, are you typically finding the leads from the children of the parents, or I mean, no, it's a combination of both, but just curious what the numbers say.
It depends on the care level, right? So, and just to kind of explain that to your audience real quick, there's typically 4 care levels. There's independent living, which is, as it sounds, an older adult or an older couple might want to downsize, simplify their life, so they're going to find a community where they can do that and be with like-minded adults. And then you've got assisted living, which is just very similar, but just maybe they need some help with activities of daily living. You've got memory care, which is typically, Alzheimer's, dementia. And then you've got skilled nursing, which is probably the most complex asset out there for sure. But it just depends. If you're looking at independent living, that is more of the seniors themselves looking. But even then, more than 50% of the time, the adult children have some influence over the decision. They may not be making the decision, but they're definitely weighing in on it. A lot of times they're going on tours with their mom or dad. They're asking certain specific questions. They may even be helping with the financial end of it or the move or whatever. So the family is typically involved, even if it's the senior making the choice. But every other level of care, I'd say assisted living, memory care, and skilled nursing, the family's always involved. And you have to think about it too. This is an industry where less than 10% of the addressable market will ever move into senior living. So you're literally trying to sell something that people say they don't want or refuse or deny that they need. So that becomes a challenge in and of itself.
Yeah, no, that's a good point. And then, I've noticed just, I know there are facilities that have a campus with, maybe even all of what you just listed, right?
Yeah.
But sometimes there's like independent ones that you'll see, like we've got down the street from us, a memory care, and it looks like that is probably all that is. It's just a memory care facility. So it's just it's interesting how the industry is, where it has either a campus that you can maybe start on one side where it's just independent living, and then maybe move to assisted living, and then just kind of continue to reside on the same campus, but depending on what level of care that you're needing. Just there's so much out there, so many different opportunities.
There are, and those campuses, there's continuing care retirement communities, or sometimes they're called life plan communities. Those will typically have all levels of care. And that's, ideally, if I were to move into a community, I would want to know that I could stay in one place and, age in place essentially, and just move through those different tiers, rather than having to move from facility to facility. And that's definitely problematic in our industry. But the thing to keep in mind too, like, we keep hearing about the silver tsunami, and that there's going to be this massive influx of seniors, but it's more of a tide than a wave, right? Because it's slow, and it's just increasing and increasing and increasing year after year. But most, it's like 55%, I think, of all senior living residents are 85 and above. So most are not looking at, even for independent living, most are not even looking at that until they're 75 or older. So even though retirement is 65, you got basically a decade where people are not necessarily in a space where they want to make that change, or they need to make that change.
Yeah, that makes sense. There are some of the independent living, and even now they've got the senior, kind of neighborhoods and various things. And I could see some appeal in a situation like that. But there is still the reluctancy to, I'll do this when I absolutely have to, kind of thing, and which in a lot of cases, it means they're going to put it off until it just absolutely becomes a necessity.
Right.
So how about, one thing I think that, always shocked me as I learned a little bit more about it was just the expense of, and I recognize that all the facilities are different, but, how much, living in a senior and assisted living, and, I'm sure memory care is even, probably even more, but what from a price standpoint, many of us have aging parents. What can people expect to potentially have to start paying if mom or dad has to go to one of these types of facilities?
Yeah, I mean, the national averages don't necessarily give you insight into your local market, but on average, I would say if you're looking at an independent living model, that's anywhere from, say, like $3,000 to $5,000 a month. Probably closer to the 5,000. If you're looking at the luxury independent living communities, they're definitely going to be on the higher end. Some of them, there's even an entry fee. So like a CCRC or life plan community, people are literally putting up their houses, they're selling their homes, they're paying like $150,000, all the way up to like over $1 million as an entry fee to get into these communities. So there's a big expense there. Assisted living, typically that's more, obviously, because it's a higher level of care. There's medication management, bathing, help with dressing, things like that. So that's running typically $4,000 to $7,000 per month. But as your parents' needs change and evolve and get more complex, that cost will go up. So there's usually a point system involved with that. And then memory care is above that. Memory care is usually anywhere from $6,500 to, I've seen it all the way up to around $12,000, $13,000. But typically, we'll say $6,000 to $10,000 on average.
Yeah. Which again is kind of mind blowing, because you think somebody coming into retirement, somebody who's socked away X amount for living expenses, nowhere in there, in most cases, did they factor that at some point I'm going to sell, my residence, but I'm going to turn right around and buy a, $1 million home,
Yeah.
and have a $1 million mortgage, to go along with that. I mean, that'll eat up the retirement really pretty quick. So it's just it was eye opening to me, and we've had a lot of financial advisors and folks that have talked about, just having the ability to be prepared for that kind of thing. So I know that's not what we're necessarily talking about today, but I just kind of wanted to expose the audience to that if they hadn't already thought about it, kind of what those averages would be. And like you said, that national average is just average. It doesn't necessarily mean it's the place down the street that you're, hoping or thinking that might be a good fit for mom or dad. So
Yeah, absolutely.
all right. So there's money in it is what we're just said, right? There's money in it from an investment standpoint. Obviously there is with anything. But not all the facilities are the same by any means. There are some that seem to cater more towards government funding. We knew the difference when we walked in those places my prior position. Just even the smell when you go in is different. And I know that's terrible to say, but it was the reality. And then there's of course much nicer facilities, and there's a lot in between that's kind of a combination of that. So what are some of the things from just maybe an ops standpoint that you look at and say this looks like one that's run really well from that standpoint? And then of course the things that they can utilize and do to optimize, kind of where they're getting their clientele from.
Yeah, that's a good question. I mean, the challenge with senior living, I think, is because it's such a complex operational asset. It's like multiple businesses in one. A lot of times when looking at it from like a real estate perspective, they just see it as like a multifamily investment, but it's real estate, healthcare, dining, transportation, social services, and entertainment, like all built into one. So how is that operator managing all of those different pieces? It's difficult to say for sure. On the surface, I would say a lot of communities might seem like everything's running fine. They might have, occupancy or census above like 90%. So all looks good, but maybe their pipeline's not working. Maybe they're not getting leads from the right sources, or maybe they're having staffing issues. Maybe they have a reputational problem that just popped up, and now for the next 2 months they have less people inquiring because their star rating just went from 4 or 5 stars down to 3 stars. So there's all sorts of things like that can impact from like within the community itself. I would say it's typically the core team, the executive director. They're kind of the maestro of the entire organization. They call them like mini CEOs now, right? So they're running. They have to have financial acumen. They have to understand marketing. They have to understand sales, and they have to understand how to merge all of those pieces together and make sure they're all talking. So yeah, I mean, the executive director is typically the first place we look and see how they're handling things, because it trickles down for sure. The culture comes from the top. And sometimes it comes from corporate. Sometimes it'll come from the executive team. But they're typically driving the bus. And a lot of times you'll see like an executive director, if they leave and go somewhere else, half of the management team will go with them. So it's challenging. There's a lot of value built into the team that's running the operation and not just the building itself.
Yeah, that makes a lot of sense. WealthFlow audience, pardon me for a quick interruption to today's show, but I have some exciting news that I want to be sure that all of our listeners are aware of. We just launched 3 totally unique to the market funds that are at the cutting edge of technology and AI. We have combined my 25 years of real estate experience and my recent work as VP of development for a tech company to bring 3 awesome investment options to our audience. For full details, go to our website at bobocapitalventures.com. Again, that is BOBO capitalventures.com. All right, back to the show. What about when it comes to kind of how it's being run, that kind of thing. Is there, so you mentioned kind of like activities and stuff, because there are, I mean, they've got, usually a calendar every month
Yeah.
that's got just like loads of different things. I mean, we've been involved in a lot of them, whether it be, lunch and learn, to talk about prearranged funerals, or and we're just one of the folks that, could help out with that. But a lot of times they need some type of educational stuff for, some type of funding that they may be receiving. And then there's just fun stuff as well. We did happy hours and those kind of things as well, just to get to know the residents. So there's a lot of different things that they are exposed to, and have the ability to kind of keep everybody busy, type of thing. So. How about with lead generation? What are some things that are typically not done right? And then I'd like to hear maybe the perspective when it comes to that. If you see a big difference between, I don't know, mom and pop type operations versus more of a corporate setting where you've got maybe it's one of many facilities that they have throughout the U.S.
Yeah, no, that's a good question. Realistically, that funnel system, and I say from lead to lease essentially is what we're going to be looking at and seeing how that's performing. A lot of times, sales and marketing will be seen as different departments, but they're one and the same, because marketing is essentially handing that lead off to sales, and then sales is doing what they need to do to ensure that it can move into the operational side of getting that person moved in and all of those things set up. So looking at how that whole pipeline is working and functioning, we started off with marketing, just making sure that they had good quality leads coming through the door. From there, it's looking at sales and saying, okay, how long is it taking that sales team to respond to a lead that comes in? Is it 2 days? Is it 3 days? Is it 5 minutes, 1 hour? All of those things will impact how quickly they convert. So we're really looking at that, and then making sure that they have enough touch points along the way with these families, because like I said, nobody's searching and then moving in. It's like there's multiple touch points, and that sales team has got to be on top of all of those. So looking at that, do they have automations in place where if somebody fills out a form or picks up a phone and calls, for example, they're going to get a response right away, or is it all manual process? So just making sure they have that whole funnel system in place, and then the layer behind that, I guess, would be the CRM. What system are they using to track those things throughout? And then also, I think one of the things that I see a lot with sales team is they become biased to certain sources. So we had one sales team, for example, that just believed that any leads that came from social media were junk.
Yeah.
And some of them or most of them might be, but there could be a percentage of those that are good quality leads, and they're just ignoring them. So making sure that the sales team has a philosophy where it is treating each lead properly and vetting it before just tossing it out the door.
Yeah. No, I think that's huge. And that I've seen that in business as well. And a lot of times what we do is just reassign those leads to a different team and watch how many are converted, and then make a big deal about it and be like, hey, these are those leads that we gave you that you didn't follow up on. Yeah. This is a $5,000, $10,000, whatever dollar sale.
And that's a misnomer in this business too, because people think that, I'm going to focus on the hot leads and they're going to convert faster, but it's actually not true. It's a lot of times, and again, especially in this industry, because it's a slow process. I need to collect some information. I need to understand what level of care mom or dad needs. And then once I know that, then I can start looking at each of the communities and what they offer. But, somebody might inquire and not be ready to tour, or not be ready to even have a phone conversation yet. So they'll be marked as like a cold lead. And because they're a cold lead, nobody follows up with them. But they might just need help with research, or they may just be in a different phase. And maybe a month from now, they are ready to move. And because you didn't do anything to stay top of mind, they're not going to come back around. So I think it's interesting because it's such a long sales cycle. The average length of time for a sales cycle in senior living is 180 days.
Yeah.
Which is crazy.
No, it makes total sense though.
Yeah.
I mean, you sometimes people will have a health scare, maybe a stumble, maybe they trip, maybe they have a fall. The family comes in, and is very concerned and starts to maybe make some of these inquiries, and then they bounce back and they're like, okay, well, we'll hold off for right now. But if they've come into the lead system in some form or fashion, and you can continue to nurture that lead over and over, and just continue with follow-up systems and whatever it is, then you'll be top of mind when it comes time for them. It's a difficult decision for people to make as well, right? It's not something that's just super easy, and a lot of times there's the reluctancy to do it until it's just absolutely necessary. And so you're going to have those long lead times, like you mentioned, or conversion times.
Yeah, and this industry too, I think they're just antiquated. They're behind when it comes to integrating technology. I mean, right now everybody's so excited about AI and all these data tools that are out there. Now everybody's got 10 different dashboards that they're trying to manage with all these numbers, but none of it makes sense to them anyways. So they're focused on that when they really need to be focused on building these core systems, like I said, because that's going to be the thing that sets them apart. And digital marketing is the way that most communities get their leads nowadays. It used to be mailers, it used to be billboards, whatever type of advertising they could do in the local community. And building up those local community networks are obviously important. Go to your local churches, your hospitals, your doctors' offices. That the sales team needs to make connections with all of those. But when it comes to marketing too, it's like the visibility piece is huge. And being found online, and not only being found online, but being found as high in the search results as possible. So making sure that they have that digital visibility piece is going to be really important for that family to move quickly when they are ready to move.
Yeah, for sure. For sure. And so with the industry right now, what do we see out there? I mean, do we see that there is I know there's because we've had guests on the show that this is their industry, right? They go in, they buy, in a lot of cases, mom and pop operations to add to a larger portfolio that they have. Is private equity in this business at this point? And I guess what all are you seeing out there?
Yeah, there's typically a couple different models in terms of what people are looking to get into. I mean, there's a lot of independently owned operations out there. Those communities are pretty, if they are sound, if they have a decent census or occupancy, I think those are worth looking at in terms of investment. You've got a lot of operators that may be looking to sell or expand or acquire new communities, and a lot of times they're doing senior housing operating partnerships. So SHOP, they're doing a lot of that. So it's no longer this asset where you've got the operator managing it, and then the investor kind of on the outside. Now the investor's involved in that whole process. So those small independently owned ones. Second would be like a value add acquisition. There's a lot of communities out there that are in a good market. The market, everyone else in the market has a occupancy of like 85% or 90%. And then you might see a community that's sitting at like 70, 75% in that market. So, why is that occupancy low? Is it low because of the management? Is it a marketing problem? So, looking at that gap and determining if that's recoverable or not. And that's, I don't expect an investor to know those things. I think that's one of the biggest challenges with investment in general right now is that they're getting the picture from like a financial due diligence standpoint, right? It's easy to understand those numbers, like cap rate, NOI, all that kind of stuff, rent rolls, but
Right.
they're missing like that market facing layer. So asking questions like, can the operator win families in the local market? What are they doing to get visibility in that local market? Is their pipeline owned, or is it third-party aggregator? Is a place for moms sending them all of these? That's gonna impact their NOI big time. So just looking at those types of things from an investment standpoint, and just making sure you're able to do your due diligence, I think is probably a good place to start.
Yeah, no, it makes a lot of sense. And if you're seeing more than just one opportunity, then like you guys are able to do, Jerry, where you can look and say, operations cost for this specific thing seems very inflated here. Why is it so high? And being able to drill in and see those things, to where a layman investor that's just looking at it as an opportunity, we see, X line item and say, I guess that's about what that normally is for a facility like this, but there may be a bigger story if it's, kind of not in line with what other senior living places are experiencing.
Yeah, I mean, that's definitely a big question, because without the context of knowing how everyone else is performing in that market locally or regionally, it's really hard to be able to determine if that's a good asset or not. Just because you can look at that number and say this is what the operator's producing, but how does that stack up in the market, and is that sustainable? And is that something that can grow over time, or is that something that you can't predict? And if you can't predict it, it's very hard, I think, to invest in something like that without really truly knowing how that operator is performing, and how they're ensuring that their community is going to stay well run and full as possible anyways.
Yeah. Is there and you mentioned kind of the value add with respect to occupancy, and why is there one in a specific market where the majority of them are at, say, 90%, and you got this one at 70%? Are there still finds out there where maybe it's not occupancy, but it's maybe the occupancy is high? Maybe it's one of the ones that's 90, but they're charging way less than, or substantially less when you start to look at it from a number of, rooms and things. Are you still able to find some of those deals, or does it seem like most folks are keeping up with kind of market pricing?
Yeah, I mean, overall, I think there's still this kind of taboo out there that pricing shouldn't be displayed online. I'm not sure why that is, but you see a lot of communities where it's almost hard to find the cost. And so that, again, is another barrier to entry for these communities, because they're not making it easy for prospective residents and their families to get the information they need to make an informed decision. Yeah, I would say most pricing in the market is pretty competitive for the most part. What you'll see happen a lot is communities, sales teams, or executive directors will give like a steep discount for like the first month, just to try to get somebody in through the door. And a lot of times, if that portfolio has multiple communities in it, that can become a problem too, because if you're letting everybody independently kind of set the pricing, it can really mess with your numbers. So yeah, pricing is pretty steady in a specific area.
Okay. Yeah, makes sense. How about, so we've talked a little bit about some of the nuances of, investing in it and kind of things to look for. But why would an investor want to invest in this asset class?
Yeah, I mean, that's a great question. I would say the biggest reason right now is just the fact that, we've got 10,000 seniors turning 65 every day until 2030. And then from that point on, you've got essentially the next 2 decades of growth that are happening. And to keep in mind too, we keep talking about silver tsunami, but the millennials, there's more millennials than there are baby boomers. There's 71 baby boomers. There's 71 million baby boomers and 72 million millennials. So for the next 3 generations, this is an asset class that's going to just continue to grow and be sustainable. I think from an investment side, really what I look at is the supply and demand side of it, right? For senior housing, and you've got far greater demand than you have supply. Right now, we're producing less than 25% of the housing that's going to be needed. In the next, I think by 2030, it said that we need like 806,000 units to be built, which is, and that's only to 2030. You've got another 15 years after that there's going to be a growth period. So I think it comes out to somewhere around 100 to 125,000 units every year need to be built between now and 2040 for us to meet the demand of this industry. So from a developer standpoint, I think that's definitely going to be something that in certain markets, obviously, is going to be a big win, because you see, like, we've had 17 consecutive quarters of occupancy growth. And independent living across the board right now is averaging over 90%. So the buildings are filling up. And once those occupancies get to 95, 100%, where's everybody going to go? So I think that's the biggest gap, I think, right now, that from an investment side, I think we should be looking at. There's also a lot of old inventory out there. So I think it's something like 30 to 35% of inventory it's over, it was over like 30 years old, something like that. So clearly that is going to need to change too, because I don't know any baby boomers who are going to move into a dilapidated building. They're pretty picky, Right. They're the wealthiest generation with more than 60% of all real value in the real estate market right now is with the baby boomers. So they're not going to move out of their home to move into a community unless it's going to be something far better than where they're at now.
Yeah. So it sounds like there could be some opportunity from that standpoint too, just taking an older asset and giving it a huge refresh and, just completely remodeling and that kind of thing, which we just had one, kind of local to close to where I live that did do that, where it was closed down completely for, it seemed like a long time, but it was maybe 12 months or so. And, they completely did a big refresh on everything from the inside out. So makes a big difference. And then it can obviously attract, better clientele and also just, more folks as opposed to them going to somewhere else. So I agree with you. I think there's, it's a huge industry, and there's a need for it. And there's just not enough supply right now. So I think it definitely makes it an attractive, option for investors.
Yeah. And obviously building right now is challenging. The cost, the compliance, all the red tape that you have to go through to get one of those projects approved, that's obviously delaying things. I mean, there was in 2025, there was about 19,500 units in some form of active construction. But in the first quarter of 2025, there was only 1,500 units that began being built. So there's I think our construction and development is lowered. It's the lowest it's been since 2009. So it's been really challenging for this industry, and I haven't heard many solutions of how to fix that yet. We've got like a $275 billion deficit in terms of the supply that's needed. So there's like some serious capital injections that need to happen in this industry before we're going to even make a move in terms of housing. That's going to be challenging.
Yeah, similar to kind of the rest of the housing story, really. And it seems like just slowing down a little bit over the rate hikes and the various things that have happened, over the last couple of years, it hasn't helped with those new starts. And so, again, just a great opportunity for folks.
Yeah.
Jerry, how can people find out more about you and about your company?
Oh, yeah. Yeah, thank you. If anyone wants to connect with me, I'm involved, like I said, working directly with operators to identify revenue gaps and how to fix them, but then also looking at the capital side and helping investors make more sound decisions when it comes to which operators, which portfolios would be best, or is my portfolio performing the way it should? Is the operator being accountable? All of those types of questions we can help answer. You can find me on LinkedIn. Just search for Jerry Vinci on LinkedIn. That's a great spot for me. And then ccrgrowth.com is our website, and we would love to connect with anyone who wants to connect.
Sounds good. How about, I've got two other questions I ask every guest. One would just be any advice you might give somebody who's maybe just starting out in their investment journey?
In senior living or just in general?
We can make it in senior living on this particular one, but yeah.
I think just because it's such a complex asset to look at investing in, I think first kind of getting oriented with like the supply and demand fundamentals, understanding how that works. Second would probably be, what to ask if you're evaluating a senior housing deal. So I think if there was one question a new investor had to ask, it would be like, what percentage of that community's move-ins are coming from sources they own versus sources that they pay for? Because that's going to tell you a lot about that margin that they have in terms of resilience. And then lastly, I think would be the transition risk. So for example, if the operator changed tomorrow, what would be left with that asset? Is the community's market position something that belongs to the asset, or is it something that's going to walk out the door when the management team leaves? And I see that a lot. Even, you'll see, oh, we built this funnel system or CRM system, but the agents, the marketing agency actually owns it. We don't own it. So if that relationship leaves, so does that system. So you just want to make sure you understand those inner workings, because that's really what's going to drive the predictable, sustainable growth of that asset.
Yeah, makes sense. Man, I think those are great questions to ask. How about a book recommendation? It doesn't have to be finance or investing related, certainly can be. Just something you've read, though, that's been impactful.
Well, I think, the best, I probably read it 10 times. Becoming a Category of One by Joe Calloway. It's not a new book, but just the concept of niching down and looking at how can we create our own blue ocean? How can we create a category that there is no competition? So developing products and services where that's the case. That's been one of the biggest motivating factors for me and the way that we've built our agency to do something different than what other people are doing.
Yeah, for sure. And I think even by doing that, niching down and going kind of an inch wide and a mile deep in one thing, not only is it wise from a marketing perspective, but I think, the level of influence and depth and advice that you can give somebody because you're only focused on this one sector, I think is huge. So I'll have to check that one out. I don't think we've had that recommendation on the podcast yet. So thank you, Jerry. Appreciate it.
Yeah.
And thanks for a great show. I think we'll call it a show, but thanks for being a guest on The Wealth Flow.
Thanks, Keith. Thanks for having me.
All right. If you're still here, I assume that you found value in today's show and with the guests we interviewed. Please take a minute to subscribe and to review the show. It really helps. Also, wanted to remind you to check out Bobo Capital Ventures to get the first look at our 3 new cutting-edge, first-to-the-market investment opportunities. We have only about 15 spots for each fund for retail investors, and we would love, more than anything else, to have our audience be part of that group of limited partner investors. Thanks for listening to The Wealth Flow, and have a great day.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.